Let's talk about financial modeling. Now that you understand financial statements, let's talk about how to create and analyze financial models. Okay? So by the end of this section, you will understand what financial modeling is, what the best practices are, and why this skill is so crucially important for you to be a successful analyst and stock picker. Okay, so what is financial modeling? Well, it's basically the ability to build out a spreadsheet several years in the future and understand what the financials will look like in the future for a company. It's like a crystal ball. Okay, why do we do this? Because once we finish with financial modeling in this course, we can come up with target prices, meaning what the companies we're analyzing should be worth. How are we going to do this? Well, of course, we're going to use Excel, right? And we're going to use our knowledge of the three financial statements we've already studied, okay? And we're going to forecast the future for those financial statements, okay? And then what we'll do is we'll use a little bit of magic longer term, and we'll be able to figure out what the target price is. We'll know earnings, we'll know cash flow, and we'll know revenue from the three financial statements, okay? And then we'll come up with target prices based on those three metrics from the three financial statements, okay? And then what we'll do is we'll take the average of three different valuation methodologies, one using earnings per share from the income statement, another one using cash flow from the cash flow statement, and another one using revenue from the income statement, okay? And we'll get valuations using those three different methodologies, which I'll explain in the valuation section later. And then what we'll do is we'll divide them by 3, and we'll get the blended average of what the target price should be for the company that we're analyzing, okay? In this section, we will study modeling. In a couple sections from now, we'll talk about valuation. Let's get started.